How's your portfolio looking? I want to ask you one question. Have you got an entry plan? Have you got an exit plan? How are you going to scale out during the course of the bull run? Because it's all well and good building a portfolio, but if you haven't got that strategy, you haven't got that plan, and you don't stick to that plan, that's a recipe for disaster. So for the best chance of success, you need to have rules in play. So we're going to be adding a new one to the portfolio today. This is Moonriver. I'm going to show you why I'm adding Moonriver, because of the potential upside in comparison to the potential downside. Let's dive in. Okay, so how do you manage risk for the best possible chance of success? We're going to go through Moonriver today. Then we're going to go through how the portfolio is performing. Then we're going to have a look at the crypto fear and greed. Is the market fearful? Is the market greedy? Because that goes to our advantage. And you can see on Moonriver, we've had this big, long pullback. Had a big, long pullback. And this pullback, if we just stick a Fibonacci on there from this previous low, it's come all the way back to the 886. It's currently testing the 886 to try and regain that level. You can see 86% of the move has completely retraced. So I'm interested again. What I'm going to do is just pull this up, add in some support lines. Do any of these support lines coincide with previous resistance? And if they do, are we holding these levels? So we stick our trusty horizontal ray on here, and you can see what we're looking for, guys. We're looking for the most touches. You can see we've come down here, temporarily come below, and then this acted as support, It's come back down, resistance once, resistance twice, 3 times. We've broken through, and what flips resistance in a bullish trend comes back down and tests as support. So it's come up all the way back down, traced it over 80% of its full move, 86% of its move. And now we're at a strong support level. So this is where I'm interested in from a trading perspective, guys. This is how I would play it from a trading perspective. You got two minds on investment over a long period of time for the bull run, or trading in and trading out, risking the least amount of capital. So from a trader's perspective, what do? We need to know that the momentum is on the bullish side. At the moment, the momentum's on the bearish side. We've retraced 86%. The bears are in control. We've pulled back to support. And the way that it happens with trading, guys, you don't see buyers and sellers constantly fighting a battle at different areas. What you'll see is you've got the bulls and the bears fighting at this resistance level. They're trying and trying and trying. The bears want to pull it back down. The bulls want to push it up. What happens is you've got limit orders. Let me just pull this up. You've got limit orders, guys. So what would happen is the bears that are fighting here and the bulls that are fighting here, the bears have got stop losses here. So the bears, when they're wrong, they want to use the least amount possible capital. So they've got their stop losses on there. What happens? Psychological, guys. It's buyers and it's sellers. It's the bulls and the bears. It's buyers and sellers. Sometimes the bulls become the bears. Sometimes the bears become the bulls. And that depends whether you're at support or whether you're at resistance. So the tug of war happens here. The stop losses get triggered here. The bears get wiped out because the bulls have closed above, and then you get an acceleration. All of the stop losses, all of the sell order stop losses have been triggered here. And once the sell stop orders have been triggered, that means that there's no sell orders. The bulls have fully regained momentum, and you get this big surge to the upside. So now we retraced. Anyone that bought up here has lost 86% of the move. Now we're at support. Now we're interested. We can measure the downside in comparison to the upside. So how am I playing this? DCA at strong support. So $50. I'm going to be adding $50 to this today. Where am I going to be exiting? How am I going to be playing this? Because if I just zoom out to the weekly chart, we can see where this thing's been. And what do? I always say coins that have been battered by this much, I'd expect them to come to the 38.2% retracement. However, look at this. If we stick a Fibonacci on here from its previous bull market high all the way to the low, and then just make sure the fibs are lined up, all the way to its bear market low here, where's the 38.2% retracement? 38.2% of a previous swing is conservative. If we measure price action from where we are now to the 38.2%, that's 2,268%. How do you play this? If you want to try and get that move, how do you play this? Because it might not happen, guys. You have to think that it might not happen. So how do you prepare for that? We're zooming back into the daily chart. And simple things like this, right? This was the previous swing here. This was the previous swing here, the previous major swing. So what I want to do is I want to measure a Fibonacci tool, and then we're going to measure our risk to reward from this. This is more conservative. So we get a Fibonacci from this high here. That was the previous major rejection, all the way back to its low, and then get the fibs lined up. That's the important thing. Get the fibs lined up to its previous low. Now, 38.2% of this move here. You can see we were rejected from 38.2% of this move here. However, would this be a good target for 50% off the table? Your initial capital will be regained and then some. Let's have a look at the measurement from here. From there to this previous 32 is 377%. So putting $50 in there, taking 50% off here, that takes your capital off the table and then some, whilst keeping 50% to go for the big 382. The big 382, which was a 382 of its major move from its previous high all the way up to $210. That might not happen. So you can give yourself the chance and the opportunity to try and make that happen whilst taking the money off the table at more conservative levels and then some. So that's how I'm playing this. I'm adding Moonriver to the portfolio. I'm going to be adding another one. I've seen something on the charts and I'm going to be adding another one. So stay tuned. I'm going to be doing another video today for you guys. And if you want to follow this portfolio full and transparent, get yourself on our new Discord group. This is our new Discord group. And this is the new Crypto Bullseye Discord group. You can see we've got lots going on for everyone. Just general, you've got welcome. You've got market analysis here. This is a popular one. Trading strategies. You've got crypto news, feedback, Bullseye YouTube portfolio. That's where you can stay up to date with the portfolio. Crypto gossip. Got lots to do with Joystream on there. My bull token and my NFTs that are for sale. So all sorts going on here. We're building a nice community on here. So get yourself over there. And the price for this, guys, it's completely free. We're building a free community and we're helping each other together. So I'll leave a link in the description below for that. Right, okay, fear and greed. How are we looking on the fear and greed front? Still in fear, 39. Still in fear. For me, this is good, guys, because you know that I'm only interested in fear and I'm not buying greed. So once we're greedy, that's where the pause goes in the portfolio. That's where you start taking 50% off the table. I want a bit of downside. I want a bit of fear. And I want to continue to build this portfolio over the next few weeks in order to give it the best possible chance of success. So that's the crypto fear and greed. What about the portfolio? How is it looking at the moment? You can see here, down $78. We had crypto Black Monday last week. So the markets went down 30, 40% in one day, shook the market. People got scared. And you can see the portfolios held up nicely against that. We're building at strong support levels. We're measuring the downside in comparison to the upside. So when the crypto market drops 30, 40%, we're expecting these coins to drop a lot less because they're at strong support where other cryptos aren't. So that's how the portfolio is doing. I'm hoping that we're going to get a little bit more downside over the next couple of weeks. It's in a loss at the moment by $78. I'm hoping it'll go in a loss for the next few weeks, and then we'll average those prices down to give us a better entry before we get that surge. So that's the portfolio, guys. That's about it for today. Subscribe to my channel if you do find this useful. If you want to follow me on my journey, I'll see you guys in the next one. I'll be doing another video later on, so stay peeled for that. Goodbye from me.